I'm Margaret Brody. I'm the CEO of Rubicon Organics, and I'm going to tell you today why you should pay attention to Canadian wheat again. I think I see a number of familiar faces in the room from last year, which is wonderful, and I hope you've been following us. Similar, if you just saw the presentation on discovery, I think we're just at the beginning of the discovery phase, and I've certainly seen that in the amount of inbounds we've been getting from or all through this year, just gradually. And it's a really exciting time to be in our business because there is a global supply shortage for cannabis, and we are Canada's leading premium operator. We see legal cannabis turning on around the world. There was an announcement on Sunday out of the Trump administration on the benefits of cannabis and the endocannabinoid system in your body. Yesterday, I was just looking at the news last night as I was going to bed, and CBC was reporting on a new medical study out of Germany on the impacts of cannabis and THC in particular for low back pain. So there's a ton more anecdotal evidence. There's a lot of anecdotal evidence out there, but now we're starting to see the medical studies. If you think about cannabis, it has not been studied like opioids have been. It's been not allowed to be studied. Those studies are just underway, starting, and there's a movement coming, and it's very exciting. So who is Rubicon Organics? We have a track record of delivering on our promises. We offer a compelling valuation, which I love to say with our low market cap, premium positioning in Canada, we have a solid balance sheet, and we have really near-term growth opportunities, i.e. in the next 12 months. So what we're seeing is the industry is very aware of the momentum, and the investor is just catching up to what's happening. We skipped through our disclaimer. I know you all read it in detail, so I'm going to move swiftly along to who we are. And we are Canada's #1 premium licensed producer. We have the house of premium cannabis brands. We have about 6% of Canada's premium market. We're located here in Vancouver, BC, and I'm hoping a number of you here today are going to join us on a tour that Smallcap is organizing. And we're actually going to have a little bit of fun tomorrow. Today we're going to talk about the serious investor stuff. Tomorrow we're going to get into the plants and talk about our brands. And we are in one of the best growing regions in Canada, which is exciting. We have 2 facilities. The Pacifica facility is in Delta, which we're going to visit tomorrow. It's a state-of-the-art hybrid greenhouse facility. It's got production capacity of around 11,000 kilos of premium flower. So, people joke that wheat is a weed and it's easy to grow, and that's actually not true. It's easy to grow it poorly. In addition to that, we have just purchased this year our Cascadia facility. The Cascadia facility is in Hope, BC, and I got in a lot of trouble for constantly talking about Hope as a CEO, so it is now called Cascadia. That has production capacity of about 4,500 kilos of premium flower. We are one of the only living soil cultivators in Canada and the world. And that is a key competitive advantage to our super premium strategy. In combination with that, we have unique IP around our cultivation strategy and our processing in terms of how the product actually comes out. And we are currently positioned as the world's leading scaled premium and organic cannabis company, which is kind of exciting in a moment like this, just down the road here in BC, something we can be proud of as BC Bud. And I would just take a minute to tell you a little anecdote, which is people don't realize where BC Bud came from. And it was actually the draft dodgers that came up from the US during the Vietnam War, and it settled in a lot of the small communities around BC, and that really started the marijuana movement in British Columbia, which I always think is an exciting and interesting sort of connection. We've won a lot of awards. Last year at the Oscars of Canadian Cannabis, which is called the KIND Awards, we won every major category. We won Flower of the Year, Hash of the Year, Vape of the Year, Topical of the Year, Edibles of the Year. We didn't pay for it. It was voted on by almost 1,000 bud tenders, and bud tenders are like the bartender. So we really care about people loving our brands and having great experiences with them. In May, we won Producer of the Year at the Grow Up Awards, again, voted on by our industry peers. We're into our 3rd year of profitability, and I'll shortly show you our results from Q2, and we had our strongest ever revenue quarter. We have proven brands. We really do. We have established one of the only, and actually I believe it is the only portfolio of premium brands, and we've been able to use that brand platform as a launch pad for more products. We launched edibles in 2003 and then into the vape category in 2024. And our vape launch really successfully leveraged our brand strength. We got to 55% distribution, i.e. in 55% of stores nationally. Within, I think it was 6 months, we delivered, that was our fastest ever launch. We also won Vape of the Year and Best New Product of the Year with that product. It's all about being able to being able to deliver quality consistently, time and time again. So building that brand promise, and that is absolutely our imperative in what we do. So that focus on quality has made us a leader in Canadian cannabis. And it's our view that we're ready for that re-rating opportunity we've just heard everybody talking about. We have significant uplift in the near term. The pricing of our new facility isn't included in the current numbers. You can see certainly investors aren't crediting us for that at all. And we're really strategically positioned to get a higher valuation model given the premium positioning that we've got. And we're doing something that others can't. And a lot of people have spent a lot of money trying to do what we are doing, and we're successfully delivering on it. I won't go into the very large cannabis companies that spent a lot of money trying to build premium, but we're very proud of what we've got. We saw sector decline really from 2021, and it was a cold, long Arctic breeze over cannabis, which was a bad word. We stayed focused, exactly as they were just talking about in the last presentation, if you saw it. We put our heads down and we built the business. So we focused on building our team, developing our brands, looking at operational efficiencies, and in those tough times are when winners are forged and leaders are forged. And I'm extremely proud to work with the team that I do, and it is absolutely a team effort as to why we're here today. In January, I told our board, this is going to be a transformational year. And I didn't completely know all the steps. We had a vision of where we wanted to go, but given the size of the company we've had to be opportunistic, and we were opportunistic in identifying the Cascadia transaction. And I'm going to take you through where the growth has come from to date and what we have lined up in the very near term. But first, Q2 results. We've been busy positioning our company for this growth. Year-over-year revenue in Q2 was up 24%. We closed a $4.5 million private placement in April, which I can tell you was crazy volatile times in the markets, so to do that was exciting. We purchased and closed on the purchase of the Cascadia facility in Hope. We launched a new all-in-one product into the market, and we appointed Glenn Ibbott, who's here with us today. Glenn, he's our interim CFO, very proud to have him on the team. He's best known for his tenure at Aurora. He was there for 7 years, and his experience in particular comes at a pivotal time because he's been involved with scaling capacity and entering new markets, and that's the phase that Rubicon is entering. So in terms of the numbers, we did all of this and executed on all of this while we delivered record revenue of $15 million, up 24%, as I said, from the prior period in 24, 21% on Q1. Our gross profit before fair value adjustments was $5.1 million, another record high, up 40% from the prior year. That margin improvement is really about throughput capacity, benefits of scale, and ongoing operational efficiencies at Pacifica. Bringing it all together, adjusted EBITDA for Q2 25 was $1.4 million, up $900,000 from last year. And it was our 5th consecutive quarter of positive adjusted EBITDA. And it really shows the strength of our business because we are investing in our business now and we're still able to stay profitable because we're investing for growth. So turning to cash flow and financial health, we generated $800,000 in cash from operating activities, and that was compared to an outflow of $300,000. Really, that's just working capital management as we're growing our business. We closed the second quarter with $7.3 million in cash and a solid working capital position. Our liquidity remains strong. I'm a CPA by training, so take pride in that. And I would say, got very disciplined cost control and a very prudent capital structure. In November of 24, we restructured our debt to $10 million in credit agreements with a 5-year term at a 6.75% annual interest rate. I had an investor in this space said to me, "There's no way you'll do better than your 7.5% debt." And I said, that was last summer. I said, "If I do it, will you buy stock and tweet about it?" Because he's quite a well-known investor in the space. And he did, because we did it. So that was a fun moment for me to actually deliver on that, because we like to deliver on our promises. So where are we in terms of the market? We have seen revenue growth in all of the major markets, and you'll see notably except Quebec. We've got some work to do there. These are the 4 largest provinces. Very excited to see these numbers. We've done that and that double-digit growth Without using our balance sheet, we've used contract manufacturing. So we haven't purchased new facility or anything like this. This growth is all based on what we've been able to achieve using our people and innovation in our business. We've demonstrated that we can grow in both existing segments and enter new segments. And we've entered highly competitive segments, and we've done very, very well in both edibles and vape. It's all about execution and being focused on quality. And quality is one of our values, and we talk about it every day. That ability to bring swiftly new products to market that hit a consumer segment the consumer is very excited about, it helps us capture market share, and it reinforces our leadership in premium. That is all done off the back of the power of staying committed to premium flower and doing it right. We really want to deliver on that brand promise, so when someone trials something, they have a great experience, then they repurchase, and then they recommend. And that's an incredibly important cycle from a consumer perspective. That also is brand building. So we've consistently grown our business. Here's our growth drivers. Our revenue has every year outpaced overall industry growth. Our edibles portfolio, it grew last year 185%. It's up 25% this year. We've launched into the vape category, and we've done incredibly well there. We've got 7 strains. I'm very excited about that. From launch of vape last year in midsummer, we went to the number 2 position in resin vapes in the country and captured 15% share of that market from a standing start of 0. And that was till June this year. Really exciting. And pre-rolls are now growing in market consistently, and they're the largest category of all cannabis consumption in Canada now, and we've been part of that huge growth. You'll see us on menus across cannabis stores in Canada. On top of all of this, we have been building momentum and interest in our brands through leading genetics. And leading genetics, I want you to think more about fashion and fashion houses where you want the new thing. That's what we are doing, and we're working to build Canada's leading, and ergo, I'd really like to be the world's leading genetics house. I believe that's something that will be monetized in 3 to 5 years. All of these growth drivers, you can see them right here in our net revenue and our gross profit growing on a 12-month basis. So next, what's to come? We've bought the Cascadia facility. It's got an increase in our production capacity by 40%. I'm going to speak to it in a minute. We've got incremental supply of about 2,000 kilos through long-term third-party supply agreements. We launched our all-in-one vape just this summer. Very excited about that. Again, a shift in convenience of the consumer. We did our first international test shipment to Poland, of all places, and we're taking a strategy of test and learn, because we've learned that you do not need to be first to market to win. In fact, a lot of people spend a lot of money opening up those channels. We are focused on being best to market and winning in the long term, building real channels. So we received our certification that we needed to ship in the February of this year, and we're continuing to evaluate that strategy. It's very exciting what's happening in the world right now. We've got a lot of new genetics coming out. We just put our pre-roll automation, it was $1 million project. We've turned that on in June very successfully. That will provide us with about $1 million in annualized savings in our business. So that's very significant. And we've got lots of other cost-saving projects beyond that, but I'm keeping my powder dry to make sure that I'm delivering on them, and you'll hear more about those in future. So next slide, thank you. So these are 2 facilities, and I'm sorry we don't have a fabulous new photo of Cascadia. The Delta facility is where many of you will join tomorrow. We're just in the process of renaming it Pacifica. It's 125,000 square feet, British Columbia, and it delivers consistent premium and organic product around the country, and we've seen that through the success of our brands. Our new Cascadia facility really is going to allow us to satisfy more demand, and we do have the demand, which is exciting. It's 4,500 kilos of production capacity, and we spent just $4.5 million for that project. We're going to spend another, call it $2 million in capex. It's well underway with about $1.5 million being spent this year. We think the low end of estimates would be that it would cost $12 million to build that today, excluding the specific cannabis equipment. We're very thrilled with the ability to grab that asset. It is strategic in that it's an hour and a half from our existing facility, so operationally much more straightforward to manage. But it's going to take us a minute. We're expecting the licensing sometime in the fourth quarter. We'll have first harvest in the first half, which is when we're going to start to see revenue hit. But we expect it's going to take 12 to 18 months from the license to really get it optimized, and that's okay, because we care about the quality coming out of it, not just the volume. And we're really excited. It's an indoor strategy, and we can do indoor premium. This facility was known for producing premium product before. And we can take genetics that really just didn't perform in the greenhouse environment and put them in the indoor environment. We've got some hypothesis on what's going to work well, but I think it's going to be a great opportunity for our business. And it means that we can capture unmet demand for our capacity-constrained brands, which is a rare situation to be in. So what's next? We are unique in Canadian cannabis. We grow in living soil, which is the more difficult way to do it, and it provides that premium experience to the consumer, so that richer taste, full aroma, and consumers just love it. Many can make a lot of small lots of premium cannabis, but there is not another Canadian operator with organic methodology, scale, and a national route to market, or a house of premium brands. We're sitting very uniquely, and it's pretty exciting to be sitting uniquely in the world at this stage with what we have. And I think we as Canadians should be very proud of the Canadian industry and what we've built, because we have an opportunity to be the world leaders, and currently we are the world leaders in cannabis, with the US being locked out. So in terms of our brands, and those who are coming tomorrow, we're going to talk more about these then. We have 3 flagship brands. Simply Bare Organic is for that premium connoisseur who really knows what they're doing. We're switching out the genetics. We're getting the leading world genetics here, and it's flavorful, and it's exciting, and it's lots of fun. 1964 for the premium consumer, really looking to recruit from the legacy market. So we tend to have strains that were famous in the legacy market. And then we've got Wildflower, our wellness brand, and I'll speak to Homestead in a minute. So until recently, the consumer couldn't actually see in the packaging. The law has just changed where you can have a small window on cannabis packaging. So it was really about, when you opened up the bag, the experience of what it looked like inside. And so we stayed focused from day one on consumers having a wonderful product quality experience. Not everybody had that focus, and really always about elevating our experiences for our consumers. And that builds that brand trust and a promise. We have a reputation for premium flower. Notably, we won Flower of the Year in 2022 and 2024. And we've used this brand reputation as a platform to launch new products and revenue growth. Lots of evidence on that. In 23 and 24, I don't believe 25 study is yet out. There's a big study of 2,000 or 3,000 bud tenders across Canada. We were ranked 2 of the top 5 most recommended brands in Canada. By both our top 2 flower brands. Secondly, our edibles we launched, they went to the #1 premium edibles position and have held that position since the launch, almost over, I think it's 26% right now. And that was within a year of launch. Again, the power of the brands. And thirdly, our vape launch, as I mentioned, rose very, very quickly to 15% share of its market within a year. And again, really difficult to do in a market where there's a lot of products and competition. And then on to wellness, Wildflower. It's the #1 topical product in Canada. We have 28% share of the topical market, and it's a higher price point than many of its competitors. A lot of people have come out with a lot of different products in this category. We've done what we do, and we do it very well, and that's why we're winning here. It demonstrates the power of a premium product. Our Homestead brand, I would love to sell 0 Homestead. Homestead is when we have a product that doesn't meet the quality standard for Simply Bare or 1964. We actually we sell it under Homestead Cannabis. So if it's aging, if it has the genetic hasn't hit, there's something with the smell, we'll be disciplined about that, because again, we're building a brand promise, and that quality standard is important. But that product all turns into cash. So we're building a true CPG company. We're seeing brands in cannabis emerge, and we have consumer loved and bud tender recommended brands, and we're very excited with where that's going to go. Here you can see some market information on the company. We're 42% insider held. I did have some chuckles this morning as they were laughing about those moments when the market was down and talking about going private. You know, you think of all of those things in those long, cold days. We have 67 million shares outstanding, and we're trading around, last I looked, around 60 cents, so about a 40 million market cap. A number of companies in our space have re-rated in the last number of months. We're just starting that journey, I would say. And you can get coverage on us from Neil Gilmer and Pablo Zuanic. So I'm going to talk a little bit about us and about the industry. Here's who our people are. I would say we have a board for $1 billion company as a $40 million company, and I work with an incredible team, and you'll see our team is long-standing and has a great reputation. I'm very proud to work with all of them. Next, comparables, industry metrics. This is what this group is all about. These industry metrics that are up here are, we didn't put the names, but they're companies that are investable Canadian cannabis companies. They're companies you would all say, yes, that is a fair comparison. We believe that our valuation metrics stand out compared to our peers. And this doesn't even reflect where we're going to be with Cascadia turned on. We own the facility, it is paid for. We're just waiting on that license, as I would reiterate. And it's going to significantly impact positively our bottom line. As a reminder, we have delivered 12-month revenue growth of 34%, trailing 12-month adjusted EBITDA growth of 100%, and we're currently trading at 0.7, does it say 0.6? Oh, that's 0.6 to revenue to EV. So really, all of this is before the expansion is calculated in. So we have a proven ability to capture market share, and in new and existing segments, we've got growth and strength and demand in our premium brand portfolio, and we have ample room to expand. So now that we have that clear pathway to growth with Cascadia, we're an excellent investment because we trade at one of the best valuations of investment-worthy companies in Canada. So I'm going to take you on a little quick journey. I should watch the time. Canadian market, past, present, future. Many of you would have invested in this and seen this journey, but the whole Canadian market has experienced a shakeout. Non-competitive operators have moved to the international wholesale market, and that's opened the door for disciplined, brand-focused companies to succeed in Canada. And we've seen a market shift. So the provincial crown corporations are our distributors, and similar to the liquor model, they are now selective in prioritizing reliable operators and products that sell to get on their listings. Consumers are also becoming much more brand loyal, seeking consistent value. And looking forward, the shelf is tightening, so there are many more barriers to entry to get on those lists with the provincial distributors, and only resilient and trusted brands are going to stay alive here. Our advantage is that brand strength, consumer loyalty, and our top tier. Very proud of our supplier ratings. So if you think about Walmart, they need on time, in full, and that's what the provinces are demanding of their suppliers as well. And we're thriving in this environment. So we're at that pivotal moment where enduring Canadian brands are being built, and they're going to be on shelf for decades, and we expect our brands to be part of that. So those of you who've heard me speak before have seen this expectation curve. It's called the Gartner Hype Curve. It originally was from the technology sector of, the trigger of innovation, the excitement. I think the mining sector has the Lassonde curve. This curve has been used in business for a long time. We have been through the dark, cold days, as I mentioned, in 22 to 24. We had 3 years of intense competition, a really tough correction, but now we have the rise of the clear winners. Pricing has stabilized, domestic prices have stabilized, wholesale rates have climbed, demand is outpacing supply, and that demand is not just in Canada, it's around the world. And there is not premium production, and certainly not super premium production around the world. We are seeing competition come in from the likes of Thailand and Colombia, but it's all not in the same category in which Canada is producing. And so we see a stronger, longer, more sustainable rebound for Canada and beyond. And we expect to continue to see very strong demand over the next 18 to 24 months. Here's some fun stats, because everybody likes to see the long-term chart. We expect, and there's a lot of data around the continued growth of the Canadian cannabis environment. A lot of that is because consumers are still buying in the legacy market. 30 to 40% is the estimate. And then new consumers entering the market are just going to convenience, and they've always just shopped in a legal store. So kind of like prohibition, it takes a while for people to stop drinking from stills out of their bathtub. And we're getting there with cannabis. We're also seeing that international demand, new markets, significant supply shortage, and it's going to take time for other countries to get to where Canada has developed. We've been through those fires, and we're really well positioned to capitalize on that in the premium segment.
One last point on that. We're accretive to Canada's GDP. We paid $30 billion in taxes to the Government of Canada since legalization. This is a winning program for Canada. So we're doing some work to ask for some economic support from the government, because it is an opportunity for Canada to over-index in the world. I would say similar to those in Vancouver know about the mining industry here, very similar to that. And we're bigger than the dairy industry, which I love. So, in summary, we're driving growth. Canada's leading premium house of brands, and we've got a platform for what is next. We've got near-term growth. We've got our Cascadia facility coming online, lots of operational capacity to grow us over 40%. We've had 3 years of adjusted EBITDA profitability with strong sales growth and operating cost discipline, and our balance sheet's in order. We've got long-term debt at a competitive 6.75%. We have Canada's only leading house of premium brands, and we've invested in R&D and world-class genetics. We have an experienced team, and there's a global supply shortage. So we intend to take advantage of that. We may be the friendly BC weed people, but we also, one of our values is excellence, and we like to win. So would love to welcome you to Vancouver, and those of you that are coming to the tour tomorrow to have some fun. And I want to say thanks, and I would also encourage you to go and walk into a cannabis store and have some curiosity about what we do. We're very proud of it. So.